Welcome to our deep dive into Hyundai Motor India Limited's financial performance.
For the second quarter of fiscal year 2025,
We've got,
we've got a really interesting set of documents here today. We've got their official statements, of course.
right?
We've got the limited review report from their auditors, BSR and Company LLP. And we've also got this investor presentation that they gave on November 12th, 2024.
Ever wonder what it's like behind the scenes
Yeah,
of a major car company, especially in a rapidly growing market like India?
absolutely.
Well, today you're getting a backstage pass.
We're going to decode Hyundai's numbers.
Yes.
And figure out what they really tell us about how the company's performing.
So let's get started.
Yeah.
What's the big picture here?
So the big picture is it's a little bit of a mixed bag.
Okay.
Their revenue decreased year on year, but actually increased compared to the previous quarter.
So a little bit sluggish, but maybe starting to turn around?
Exactly. And their profitability metrics,
Okay.
things like EBITDA, EBIT, and PAT, those are all down compared to the same quarter last year.
Huh.
But they did show improvement from the previous quarter.
Interesting. So some positive signs amidst the challenges.
Yeah.
To really understand, we need to dig into the numbers.
Let's do it.
Let's start with revenue.
Okay.
What did Hyundai bring in during Q2 of FY25?
So their revenue for Q2 FY25 was $172,604 million.
And how does that compare to last year and the previous quarter?
Okay, so that's a decrease of about 7.5% from the $186,597 million. They earned in the same quarter last year, Q2 FY24.
Right.
However, it's up from the previous quarter, Q1 FY25,
Okay.
where their revenue was $173,442 million.
So IP year on year, but a positive uptick quarter to quarter. That
Yeah.
definitely fits with the mixed bag idea.
Right.
Now let's move on to EBITDA.
Okay.
In Q2 FY25, their EBITDA was $22,053 million.
Yes.
Now, for those who might not be familiar with the term, EBITDA stands for earnings before interest, taxes, depreciation, and amortization.
Right.
Basically, it gives us a clearer picture of a company's operating profitability.
That's a great explanation.
Thank you.
So comparing this EBITDA to the previous year, we see a decrease of about 9.6% from Q2 FY24's $24,400 million.
Okay.
However, it's an improvement
Okay.
from the $23,403 million they recorded in Q1 of this fiscal year.
So EBITDA follows the same pattern as revenue, down year on year, but up compared to the last quarter.
Exactly.
Now let's look at EBIT, which is earnings before interest and taxes.
Right.
Their EBIT came in at $16,868 million for Q2 FY25.
Okay.
Does that compare?
That's a 10.4% drop compared to the $18,834 million from Q2 FY24.
Okay.
But again, we see a positive bump from Q1 FY25's figure of $18,913 million.
Okay, so the trend continues.
Yes.
Now let's get to the bottom line.
Okay.
What was Hyundai's profit after tax, or PAT, for Q2?
Their PAT for Q2 FY25 was $13,755 million.
And how does that number fit into the trend we've been seeing?
So it's down 15.5% from Q2 FY24, which saw a PATMI of $16,285 million. However, as with the other figures, we see an increase
Yeah.
from the previous quarter, Q1 FY25, where PI was $14,897 million.
Okay, so the story's consistent across all the major financial indicators.
Okay.
A dip compared to last year, but signs of improvement in recent months.
Exactly.
Now, it's important to remember that these aren't just abstract numbers.
Right.
They represent real-world outcomes.
Yes.
How many cars Hyundai sold, the challenges they faced, and the strategies they're using to adapt.
Exactly.
It all comes down to that.
These numbers tell a story.
Yeah.
So what are some of the key factors that contributed to these results?
Well, one major factor was the Red Sea crisis.
Okay.
This geopolitical event
Uh-huh.
had a significant impact on Hyundai's exports to the Middle East.
That's interesting. I wouldn't have immediately thought of something like that impacting a car company in India.
It's a great example of how interconnected the global economy is.
Right.
You know, what happens in one part of the world can have ripple effects across supply chains.
Yeah.
And impact a company's bottom line. So even something happening thousands of miles away
Yeah.
can influence a company's performance.
Absolutely.
What else played a role in shaping these results?
So we also need to consider the cyclical and seasonal nature of car demand.
Okay.
Certain quarters are naturally better or worse for sales.
Right.
You know, for example, festive seasons in India,
Mm-hmm.
like Diwalis, tend to boost demand,
Right.
while other periods might see a dip.
Right. So it's not just external shocks, but also the regular ebb and flow of consumer behavior.
Exactly. And Hyundai also provided a breakdown of their domestic sales mix.
Okay.
So essentially how different car segments performed.
Yeah.
And there's a fascinating trend emerging here.
Let's hear it.
They've seen continued strong growth in their SUV segment,
Okay.
a trend often referred to as premiumization.
Right.
More and more Indian consumers are
Yeah.
opting for SUVs,
Why?
likely due to a combination of
I
factors.
can see the appeal.
Yeah,
SUVs have that spaciousness,
right.
the perceived safety, the go-anywhere image.
Exactly. It's all of those things.
Right.
Rising incomes,
Mm-hmm.
a desire for more space and features,
Right.
and even that perception of SUVs as being safer and more stylish.
So it sounds like Hyundai is capitalizing on this shift towards SUVs.
They are.
And this begs the question, how will they balance the needs of different customer segments going forward?
Oh,
Will they continue to push for premiumization with SUVs,
uh-huh.
or will they try to re-energize their hatchback and sedan offerings?
Yeah, that's a great question.
And speaking of balancing needs,
Okay.
one thing that really stands out to me is that despite the challenges they faced, Hyundai managed to improve their margins.
Right.
How did they pull that off?
Well, that's where the concept of cost efficiency comes in.
Okay.
Even though their revenue dipped, Hyundai seems to have implemented measures
Mm-hmm.
to control their expenses.
Right.
Think of it like tightening your belt when times are tough.
So streamlining operations, cutting unnecessary costs, finding ways to do more with less.
Exactly. It's a
Yeah.
classic example of how companies adapt
Yeah.
to challenging environments and protect their profitability.
Absolutely.
Now, let's zoom in on some specific highlights from their investor presentation,
Okay.
starting with their new car launches.
Okay.
They specifically mention the Creta and the Alcazar.
The Creta has been a popular model for Hyundai for a while now, hasn't it?
It has, and it continues to be a star performer for them.
Ah.
It even won the prestigious
Wow.
Best Design Project Award in 2024.
Wow, that's impressive.
And they've sold over 100,000 units in just 6 months,
Really.
which is a remarkable achievement.
100,000 units in 6 months. It really shows the power of a successful new model.
It does.
Wow.
And it highlights how a successful launch
Right.
can really be a game changer for a company.
Absolutely.
Now, what about the Alcazar?
Well, the Alcazar, it was launched more recently, right, in September 2024.
That's right. And while it's still early days,
Okay.
there are some promising signs.
Uh-huh.
Hyundai's positioning it as an intelligent, versatile, and intense SUV.
Right.
And they've packed it with features like advanced technology,
Yeah.
a range of powertrain options.
Right.
It also comes in both 6- and 7-seater configurations to cater to larger families.
So they're trying to capture a different segment of the SUV market with the Alcazar.
They are.
It's interesting to think about the whole process behind launching a new car model.
Yes.
It's a huge undertaking, isn't it?
Absolutely.
We're talking years of research and development,
Years.
extensive testing, massive investments in manufacturing and marketing.
And it's not just about designing a cool-looking car.
Right.
It's about anticipating what consumers want, meeting safety and regulatory standards,
Right.
and ultimately making sure the car performs as promised.
And there's always the risk that the market won't respond the way you hope.
Exactly.
Yeah.
A successful new model can be a huge boost.
Yeah,
But a flop can really hurt a company's bottom line.
absolutely.
So it's high-stakes game.
Yeah, high stakes.
Now,
Yeah.
speaking of innovation,
Yeah.
Hyundai also highlighted their new high CNG Duo technology,
Okay.
which is available in both the Creta and the Nios.
What's special about this technology? Is it something specific to the Indian market?
It is.
Okay.
It's all about enhancing customer comfort and convenience when using CNG or compressed natural gas as fuel.
Right.
So this dual-cylinder technology
Okay.
improves the CNG experience by providing smoother performance,
Okay.
better fuel efficiency,
Right.
and reduced noise and vibration.
So it sounds like they're responding to the growing demand for CNG vehicles in India.
They are.
Yeah.
It's a smart move to cater to a specific market need
Right.
and provide a more appealing alternative fuel option.
Now, before we move on, we can't talk about the car industry in 2024 without addressing the elephant in the room, electric vehicles or EVs.
Of course not. Everyone wants to talk about EVs.
What's Hyundai's EV strategy in India?
Well, no deep dive into a car company these days
Right.
would be complete without talking about EVs.
Yeah.
It's clear that the automotive industry is undergoing a major shift
Right.
towards electric mobility,
Yeah.
and Hyundai is no exception.
Yeah.
They've already launched a couple of EV models in India,
Mm-hmm.
and they're taking concrete steps to expand their presence in this space.
That's great to hear.
Yeah.
What are some of the specific things they're doing?
So one notable initiative is their partnership with a local charge point operator,
Oh.
or CPO, to install EV chargers at their dealerships
Oh, okay.
across India.
That's a smart move, making it easier for people to charge their EVs.
Exactly.
Is crucial for wider adoption.
It shows they're serious about investing in the future of electric mobility.
Right.
Now, while EV sales are still relatively small compared to their traditional combustion engine vehicles,
Right.
Their efforts in this area are definitely shaping their long-term strategy.
Right. It's all about laying the groundwork for the future.
It is.
Speaking of the future, let's shift gears and talk about what's next for Hyundai.
Okay.
What does their Q2 performance tell us about their prospects in the Indian market?
So they're facing some significant challenges, that's for sure.
Mm.
The Red Sea crisis,
Right.
cyclical downturns,
Right.
and fierce competition all pose hurdles.
Yeah.
But they've also shown resilience by adapting to these challenges,
Uh-huh.
improving their margins, and focusing on premium SUVs
Right.
and EV investments.
Yeah.
This indicates a forward-looking approach.
So a mix of headwinds and tailwinds.
Yeah,
How about the broader context? India's economy is growing rapidly, right?
it is, and that means more and more people are entering the middle class
Uh-huh.
and aspiring to own cars,
Right.
which creates a huge opportunity for car companies like Hyundai.
Absolutely.
However, there are some potential roadblocks
Oh,
they'll
right.
need to navigate.
Like what?
So we have ongoing economic uncertainty, rising inflation, and interest rates could dampen consumer spending.
Yeah.
Plus, there's the competitive landscape.
Right.
Hyundai is up against some really tough rivals, both from within India and internationally.
Right.
And of course, we can't forget the ongoing EV transition.
Yeah.
How quickly will consumers embrace electric vehicles?
Right.
Will Hyundai be able to keep pace
Yeah.
with technological advancements and the evolving demands of the market?
So a lot of moving parts and a lot of questions that remain to be answered.
A lot of questions.
Now, before we move on to the next part of our deep dive,
Okay.
I want to pause and make sure we connect all of this back to you, the listener.
Right.
What are some key takeaways from Hyundai's Q2 performance that you should keep in mind?
I think the biggest takeaway is that Hyundai is operating in a complex and dynamic environment.
Uh-huh.
They're facing a convergence of trends,
Okay.
the shift towards SUVs, the rise of EVs,
Right.
and the increasing importance of technology and connectivity.
That's a lot to juggle.
It is,
Okay.
and their ability to adapt and innovate
Right.
will be crucial to their future success.
Absolutely.
For you, the listener, the key is to watch how they address these challenges,
Okay.
particularly in those areas of SUV premiumization
Uh-huh.
and EV adoption.
Right.
Pay attention to their new models,
Bah.
their pricing strategies,
Okay.
and their investments in technology and infrastructure.
Right.
These are all indicators of how they're positioning themselves for the future.
Great insights.
Thank you.
Now, before we wrap up this part of our deep dive,
Okay.
let's leave you with a thought-provoking question to ponder.
All right, so with the growing focus on premium SUVs and EVs, how do you think Hyundai will balance the needs of different customer segments in the Indian market?
Hmm.
Will they be able to appeal to both the aspirational SUV buyer
Yeah.
and the budget-conscious hatchback owner?
It's a great question to think about.
Yeah,
Remember, you now have a much deeper understanding of Hyundai's business
you do.
and the factors driving its performance.
Yes.
In the next part of our deep dive, we'll continue to unpack these trends and analyze what they mean for Hyundai's future.
Looking forward to it.
Stay tuned.
Welcome back to our deep dive into Hyundai's Q2 FY25 performance.
We've looked at the big picture, the key financial figures, some of those external factors at play.
Right.
Now, let's really get into the details.
Yeah, let's do it.
There's a lot more to uncover, I think, beneath the surface.
Absolutely.
We touched on their profit before tax, or PBT, earlier,
Yeah.
but I think there's a deeper story there.
Okay, so their PBT for Q2 FY25 stood at 16,868 million,
Right.
which, if you recall, is a decrease of about 10.4% compared to Q2 of the previous fiscal year.
Right, I remember.
Yeah,
So not great, but also not a complete disaster.
exactly. And what's interesting is how they managed to mitigate this decline.
How does they do that?
Well, it was a clever combination of things.
Okay.
Cost efficiency measures,
Uh-huh.
and also taking advantage of those shifts in their domestic sales mix. Remember that rising popularity of SUVs we discussed?
Yes.
That shift towards higher-priced vehicles definitely helped cushion their bottom line,
Okay.
even with the overall sales volume being down.
So even though they sold fewer cars overall, the types of cars they sold had a positive impact.
Precisely. fewer units,
Right.
but higher revenue per unit.
Gotcha.
And let's not forget their focus on cost efficiency.
Right.
By streamlining operations, managing expenses proactively,
Uh-huh.
they minimize that negative impact on their PBT.
So they were getting squeezed from both sides.
Yes.
Lower sales volume, external factors.
Yeah.
But they managed to adapt.
Right. They weren't just passively reacting to the market.
Yeah.
They were actively shaping their financial outcome.
Interesting.
Now let's zoom out a bit and look at their performance for the entire first half of FY25.
Okay, so how do those numbers look for the first 6 months of the fiscal year?
So for H1 FY25, their revenue came in at $346,046 million.
Okay.
Now this is slightly lower than H1 FY24, which was $352,832 million, indicating a year-on-year decline of about 1.9%.
Okay, not great.
But here's the interesting part.
Okay.
Despite this revenue dip,
Uh-huh.
their EBITDA and EBIT margins actually improved in H1 FY25.
Wait, hold on. Their revenue went down?
Yeah.
But their profitability margins went up.
Yeah.
How is that possible?
Well, it's a testament to their strategic focus
Okay.
on both cost optimization and that premiumization trend we've been discussing.
Okay.
Despite facing challenges,
Right.
they managed to squeeze more profit out of every rupee they earned.
It's not just about selling more.
Yeah.
It's about selling smarter.
You got it.
Yeah.
In fact, their EBITDA margin for H1 FY25 was 13.1%, up from 12.6% in H1 FY24.
Okay.
Similarly, their EBIT margin rose to 10.1% from 9.4% during the same period.
That's impressive. It seems like they're really good at adapting to changing conditions.
They are, and this brings us to another fascinating detail from their H1 FY25 performance.
All right.
Remember our discussion about the domestic sales mix? Well, for the first half of FY25, SUVs accounted for a whopping 70% of their total domestic sales volume.
Wow, 70%.
Yeah.
So they're really riding that SUV wave.
They are. This continued trend of premiumization really underscores just how strong that preference for SUVs is becoming among Indian car buyers.
And what about their other segments?
Yeah.
Like hatchbacks and sedans?
So hatchbacks are holding steady at around 18% of their H1 FY25 domestic sales.
Okay.
But sedans continued their downward trend, accounting for only about 12%.
Okay, so the story is consistent.
Yeah.
SUVs are in high demand.
Right.
Hatchbacks are holding their own. And sedans are facing an uphill battle.
Yeah, tough times for sedans.
Now, I know we've been focusing on the Indian market.
Yes.
But Hyundai also relies heavily on exports, right?
They do. Exports play a vital role in their overall performance.
So how did they do on that front?
Okay, so their investor presentation showed that exports accounted for 21.8% of their total sales volume in Q2 FY25. Now, this is down from 25.7% in Q2 FY24.
Yeah.
Primarily due to that Red Sea crisis impacting their shipments to the Middle East.
Right, that geopolitical situation really threw a wrench into things.
It did, but it's worth noting that despite these challenges, Hyundai remains a significant player in the global automotive market.
Absolutely. It'll be interesting to see how they navigate those geopolitical headwinds and adapt their export strategies in the coming quarters.
It will.
Now, before we delve deeper into those strategic considerations, let's talk about the topic on everyone's mind, electric vehicles.
Of course, the EV revolution.
Right, the EV revolution is in full swing.
It is.
And Hyundai has been making moves in this space.
Exactly. They've been actively expanding their EV offerings, setting ambitious targets. They're aiming to have a full range of electric models available in India by 2028.
Wow, that's ambitious.
It is.
Okay.
And they're putting their money where their mouth is. Investing heavily in charging infrastructure to support this transition.
That's a bold vision.
It is, but it's not just about selling EVs, is it?
Right.
It's about having the technology to back it up.
Right, the tech behind it.
And it seems like Hyundai is making strides in that area as well.
Yeah, what are they doing?
Well, they've developed their own dedicated EV platform called EGMP, which stands for Electric Global Modular Platform.
Okay.
This platform is designed specifically for electric vehicles.
Right.
And it offers advantages like increased range, faster charging times, and improved handling.
So they're not just retrofitting existing models.
No.
They're building EVs from the ground up.
That's right. And here's what's particularly exciting for the Indian market.
What's that?
Hyundai has announced plans to start manufacturing EVs in India.
That's huge. Manufacturing EVs locally could be a game changer.
It is. It would allow them to produce EVs more cost effectively.
Okay.
And potentially make them more accessible to Indian consumers.
right? Cutting down on import costs, being closer to their target market. Makes a lot of sense.
Exactly.
Now, all of this sounds very promising, but how did Hyundai's EV efforts actually translate into sale figures for Q2 FY25?
Okay, so their investor presentation highlighted that EV sales contributed a relatively small portion of their overall volume for the quarter.
Yeah.
However, they did see a quarter-on-quarter increase, with EV sales reaching 106 units in Q2 FY25,
Right.
up from 117 units in Q1 FY25.
Okay, so it's still early days for their EV push in India, but the momentum seems to be building.
Exactly. Now, all of this brings us to a crucial point.
Right.
Hyundai's overall strategy for navigating the rapidly evolving automotive landscape.
Right.
They're facing multiple trends converging at once:
Uh-huh.
the shift towards SUVs,
Right.
the rise of EVs,
Yeah.
and the increasing importance of technology and connectivity.
So how are they planning to handle all of these moving pieces?
Well, based on their recent moves, it seems like they're taking a multi-pronged approach. They're doubling down on their SUV offerings to satisfy that growing demand for premium vehicles.
Right.
At the same time,
Yeah.
they're heavily investing in EVs,
Uh-huh.
recognizing that the future of mobility is electric,
Okay.
and they're not abandoning their core hatchback segment,
Right.
which still makes up a significant portion of the Indian market.
So trying to be everything to everyone.
In a sense, yes, but it's a tricky balancing act.
It is.
They'll need to ensure they don't spread themselves too thin,
Uh-huh.
while also staying ahead of the curve in technology and innovation.
Right.
And of course, they have to do all of this
Yeah.
while navigating a complex and constantly changing regulatory landscape.
Right. The Indian government has been pushing for EV adoption
Yeah.
with targets and policies designed to encourage the transition to electric mobility.
Absolutely.
How will all of this affect Hyundai's plans?
Well, that's a critical consideration. You
Yeah.
know, these government incentives and regulations will have a huge impact on shaping Hyundai's EV strategy.
Uh-huh.
And they'll need to adapt their plans accordingly.
So a lot to consider as they chart their course for the future.
There is.
Now, before we wrap up this part of our deep dive,
Okay.
let's take a closer look at their financial health.
All right.
Their investor presentation included some key ratios and metrics that give us a more detailed view.
Great idea.
Yeah.
Let's start with material costs.
Okay.
In Q2 FY25, material costs accounted for 72.5% of their revenue.
Okay.
This is slightly higher than the 71.9% recorded in Q1 FY25,
All right.
indicating a potential increase in raw material prices.
Okay. And that increase in raw material prices could be due to a number of factors.
Absolutely.
Global supply chain disruptions, inflationary pressures, or even fluctuations in currency exchange rates.
Absolutely.
What about employee expenses? How did those look?
So employee expenses represented 3.2% of their revenue in Q2 FY25,
Okay.
consistent with the previous quarter.
So stable.
Yes, this suggests they've managed to maintain a stable workforce despite the challenging market conditions.
Good news for their employees.
Good news for the employees.
Now, let's talk about their return on capital employed, or ROCE.
Right.
That's an important measure of how efficiently a company uses its capital, right?
It is, and for Hyundai, their ROCE stood at 11.6% in Q2 FY25.
Okay.
Now, this is lower than the 13.7% they achieved in Q1 FY25,
Right.
but it's still a respectable figure,
Yeah.
indicating they're generating a decent return on their investments.
So they're using their capital effectively, but maybe not as efficiently as they were the previous quarter.
Right.
Now let's look at their earnings per share, or EPS,
Okay.
which reflects the profitability of a company on a per-share basis.
Right.
Hyundai's basic and diluted EPS for Q2 FY25 were both 16.93.
Okay.
Now this is lower than the 18.33 recorded in Q1 FY25,
Right.
reflecting the impact of the lower profit after tax we discussed earlier.
Right.
So a slight dip in EPS, but still a positive number overall.
Yeah, still positive.
Now, as we wrap up this part of our deep dive, I want to shift our focus to the broader competitive landscape.
Okay.
Hyundai isn't operating in a vacuum.
No, not at all.
They're up against some tough rivals,
They are.
both in the traditional car market
Right.
and in the rapidly emerging EV space.
Yeah, the competition is fierce.
So how would you describe this competitive landscape?
Well, the Indian automotive market is incredibly competitive,
Uh-huh.
with both domestic and international players vying for market share.
Right.
And with the EV segment attracting even more new entrants,
Right.
the landscape is becoming even more dynamic.
So Hyundai will need to stay sharp and innovative to maintain its position as a leading player in this market.
Exactly. They'll need to keep a close eye on their rivals,
Yeah.
anticipate market trends, and constantly adapt their strategies to stay ahead of the game.
It sounds like a constant race to innovate and adapt.
It is.
Now, before we move on to the final part of our deep dive,
Okay.
let's leave our listener with a thought-provoking question to consider.
All right, here it is. With the EV revolution gaining momentum, how do you think Hyundai will balance its investments in traditional combustion engine vehicles
Right.
with its push for electric mobility?
It's a tough question.
It is. Will they be able to successfully navigate this transition and emerge as a leader in both segments?
That's a great question to ponder.
Yeah,
And it's not just about Hyundai.
right.
The entire automotive industry is going through a massive transformation.
Absolutely.
And the choices companies make today will have a huge impact on the future of mobility.
They will.
Welcome back to the final part of our deep dive into Hyundai Motor India's Q2 FY25 performance.
It's been quite a journey.
Yeah, we've covered a lot of ground.
We've looked at those sales figures, the market trends,
EV strategy,
EV strategies, competitive dynamics,
even a bit of geopolitics.
even geopolitics. Yeah, it's all connected.
It is all connected. Now let's pull it all together.
Yeah.
What are the big takeaways here?
What does it all mean?
What does it all mean for Hyundai?
So we're going to connect all these dots and give you, the listener, a clear picture
Yeah.
of what's happening in the Indian car market and what it means for Hyundai.
Perfect. So let's start with the big picture.
Okay.
What are those major trends shaping the Indian automotive market?
Well, one of the most prominent trends is that rising demand for premium vehicles,
Okay.
especially SUVs.
Right.
We've seen this reflected in Hyundai's sales mix,
Huh.
with SUVs representing a significant chunk of their domestic sales volume.
Right.
This trend is fueled by a combination of factors,
Yeah.
rising incomes, changing lifestyles, and a desire for features like extra space comfort and that go-anywhere capability.
That's like the automotive version of upgrading to a penthouse suite.
Exactly.
Yeah.
And this trend has implications not just for Hyundai,
Right.
but for the entire car industry.
Absolutely.
Manufacturers are shifting their focus towards developing and marketing more SUVs,
Uh-huh.
and we're likely to see even more new SUV models hitting the market in the coming years.
So buckle up, SUV fans. It's going to be a wild ride.
It will be.
Yeah.
Now, you might be wondering about those who still prefer smaller,
Right.
more fuel-efficient vehicles.
Yeah. Are hatchbacks and sedans going extinct?
Not necessarily. While SUVs are stealing the spotlight,
Okay.
hatchbacks still represent a significant portion of the market.
Okay.
They make up a decent chunk of Hyundai's domestic sales,
Uh-huh.
and car manufacturers are still innovating in this segment,
Right?
bringing out new models with advanced features, better fuel efficiency, and stylish designs.
So those who prioritize practicality and affordability still have options.
Absolutely. Now let's shift gears and talk about the inevitable electric vehicles.
Ah, yes, the EV revolution.
The EV revolution.
It's coming, whether we're ready or not.
It is?
And India is a crucial player in this global shift.
Yeah, it really is.
And the Indian government is throwing its weight behind EVs
They are.
with ambitious targets
Yes.
and policies
Right.
to encourage that transition to electric mobility.
That's creating a surge of excitement and investment in the Indian EV market.
It's a bit like a gold rush, but instead of gold, it's electrons.
That's a great analogy.
So with so much hype and activity,
Right.
it can be hard to separate signal from noise.
Absolutely.
What should you, the listener, pay attention to in this evolving landscape?
What are the key factors to watch?
Give us the inside scoop. What should we be looking for?
Well, one key indicator is the affordability of EVs.
Okay.
As battery technology continues to improve and production scales up,
Mm-hmm.
the cost of EVs will continue to come down,
Right.
but they're still more expensive than similar combustion engine vehicles.
Right.
So watch those price trends
Okay.
and pay attention to government incentives that might make EVs more accessible to
Right.
the masses.
Right, because at the end of the day, it comes down to how much it costs to actually own an EV.
Exactly. Another critical factor is charging infrastructure.
Right.
One of the big concerns for potential EV buyers is range anxiety.
Yes.
The fear of running out of charge
Yeah.
before reaching their destination.
Right.
A robust network of charging stations is essential to address this concern.
It's all about convenience.
Right.
The easier it is to charge, the more appealing EVs become.
Exactly.
It needs to be as easy as filling up a gas tank.
Exactly. So keep an eye on how that public and private charging network develops
Right.
across India.
Now, bringing it back to Hyundai,
Okay.
how are they positioned in this EV race?
So they were a little slow out of the gate compared to some of their rivals, but they're catching up quickly.
Oh,
They've introduced a couple of EV models,
right.
and their plan to manufacture EVs locally
Right.
could be a real game changer.
Manufacturing EVs right here in India, that's a big deal.
It is local production will help them lower costs
Okay.
and make their EVs more competitive in the Indian market.
So they're making a serious commitment to the Indian EV market.
They are now, remember we talked about the Red Sea crisis
Yeah.
and how it affected Hyundai's exports? Well, it highlights the importance of diversification and resilience in a globalized world.
It's a reminder that disruptions can happen anywhere,
Yeah.
anytime,
Anytime.
and companies need to be ready.
That's right. Companies need to have a plan B and be able to adapt.
Right.
You know, Hyundai's situation underscores the importance of having diverse sourcing and manufacturing operations,
Okay.
building strong relationships with suppliers,
Yeah.
and developing alternative sourcing options.
So being adaptable and having a backup plan is key.
Absolutely. Now let's shift our focus to the bigger picture,
Yeah.
the macroeconomic environment.
Right.
The Indian economy is facing some challenges right now,
Okay.
including inflation, rising interest rates,
Right.
and global uncertainty.
Yeah.
All of these could potentially dampen consumer sentiment
Right.
and lead to a slowdown in car sales.
So a few bumps in the road ahead.
There could be.
Yeah.
For Hyundai and the industry as a whole,
For everyone. But remember, India's long-term growth potential remains strong.
it does.
Yeah.
And that burgeoning middle class is still a major driver of demand for personal mobility. So while there might be some short-term turbulence,
Okay.
there's a lot of reason to be optimistic about the future of the Indian car market.
So it sounds like you're saying there's a lot of potential,
Yeah,
but it's not going to be an easy ride.
that's a great way to put it.
Now, as we wrap up this deep dive, let's turn it back over to you, the listener.
Okay.
What's the takeaway message here for our listener?
Well, we have explored the data,
yeah,
analyzed the trends, and discussed the challenges and opportunities.
we really dug deep.
We did. Now it's your turn to connect the dots.
Okay.
Think about everything we've covered.
Yeah.
Consider your own perspectives and experiences,
Right.
and draw your own conclusions about the future of the car industry.
It's all about taking this information
Right.
and making it your own.
Exactly. The automotive world is constantly evolving.
It is.
And new innovations are right around the corner.
Absolutely.
So stay curious, stay informed, and keep exploring.
That's a fantastic message to end on.
Thank you.
Thank you for joining us on this deep dive into Hyundai Motor India's Q2 FY25 performance.
It's been a pleasure.
We hope you found it informative, engaging, and thought-provoking.
We did our best.
We did, and until next time.
Drive safe.